Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network and brought to you by our good friends at PRMG, who are always working for your best interest. As we take a look at the events of last week, it was a volatile week, but heck, volatility has been the theme for quite a while now, hasn't it? Interesting to see the move in stocks after hitting exactly on their 200-day moving average, roaring back, only to stop at their 50-day moving average. And that's where they spent most of last week, kind of flirting with that level, having a difficult time breaking above it and giving up some gains during the day and falling behind in the afternoon. So this week will be very important and pivotal for the stock market. And as you know, lots of times when the stock market does well, it adds some pressure to the mortgage-backed security market. Now, mortgage bonds as well were very volatile. And when we take a look at what happened and what drove them, it was some of the Fed speakers. You had Fed on parade, and some of the Fed speakers saying that, hey, you know what? An aggressive system of rate hikes, 4 rate hikes, may not happen. And because of that, stocks took off. And believe it or not, mortgage bonds actually improved while stocks were improving. The thing of it is that I'm a little bit leery that this is just a temporary head fake. I think we need to be cautious going into this week. It's going to be a very important week based on technical factors, and I'm afraid that I see interest rates moving up. If we look at the 10-year Treasury, you may recall we said right around 291 would be a level of resistance, some mild resistance there, and we spent quite a few days there. Now, I think that this week we will eventually break above that level, and if we do, well, then you're going to be looking at 3.04%, and that's really the moment of truth for mortgage bonds, because a break above there, for the 10-year Treasury first, a break above there would really be painful to mortgage bonds, and a break above 3.04 in the 10-year Treasury, the next stop is like 380 on the 10-year. That means about a 0.75% rise in rates. Now, we wouldn't get there in a day, obviously, but it means that that's where we'd be headed over time. So lots to watch out for. Now, during this week, some of the news items to watch is new Fed Chair Jerome Powell. This will be very interesting to see his testimony in front of Congress. They're going to pepper him on how many Fed rate hikes, will it affect the economy, where does he see rates? So the markets will respond to that. And in addition to that, you're going to get a lot of housing data for us to break down. Last week, we got existing home sales. The number came in a little soft, but really because of lack of inventory. Home prices, the median home price rose 5.8% year over year. Inventory levels at a supply is at a lows since 1999. That's the lowest since they've been keeping records. And inventory year over year dropped by 9.5%. So demand is strong, supply is tight. Prices are probably going to continue to rise in the real estate market. Make sure you're focused on those purchases. I'll see you next week. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.